basically, this article in the FT, which historically has been a pretty gold unfriendly publication, as I've talked about many times, basically vindicates the conspiracy theorist gold bugs, right? Because you were telling me before we came on, and I'm not going to mention names, that David Jensen was attacked by this former bullion banker, saying that he didn't know what he was talking about. And I sent this article to David Jensen because he's been interviewed by me a few times, and he told me the history of the LBMA, that it was created back in the 80s when the UK had when Margaret Thatcher deregulated the city of London. It was called the Big Bang, and the LBMA was created to trade gold in London. But what David Jensen is looked into is the fact that the LBMA actually and the Bank of England, they leave the bullion banks alone. I think David Jensen even said that it's like the Old West. It's unregulated. And this guy in this article, and this guy has been in business, since in the gold business since 1978, he says the same thing. So I think it's really interesting, and they are concerned, especially the ECB. That warning of the ECB came out about a month ago. And with that, Eric, could we move into the post, which was the reason for which I wanted to interview, and I'm going to share it here before I let you talk about it, because most people think that the COMEX and the LBMA are completely separate, but they're not. They're like tied at the hip. And I'll let you read this post, and then you can talk about it.
So COMEX gold and silver eligible and registered vaults are filled to the brim. Combine this with the fact that gold and silver lease rates spiked up from time to time, means that whoever owned the physical metals at the COMEX eligible and registered vaults are not allowing the physical metals to flow back into the system. So think about why that is. Physical metals always flowed back into the system in the past, and that's how they nuclear slammed the gold and silver prices in the past.
Very interesting. And why do you think this is happening now? And let's bring up some of these numbers. Like, I think you sent me here the lease rate so people can see it. There's the lease rate is that the one here for gold?
For gold, but not for silver, because the silver one, it seems like only the insiders have access to.
Yeah.
Even Nick told me that he's not able to get it, but you can see the gold ones here. It doesn't show those daily spikes, but as we all know, this year, even the gold lease rates spiked up from time to time, right?
Yeah.
When there were shortages at the LBMA.
So why do you think this is happening? Why, and who do you think is? I think there are some COMEX data that show who's holding all that. It's probably the bullion banks. Why do you think that's happening now?
Well, the experts, the insiders, they've been accusing the dislocation, that's what they call it, as a result of the potential tariffs on gold and silver. As we can see now, after 6 months, and Donald Trump even came out and clarified it, that gold is not to be tariffed. And silver as a industrial metal, as a strategic metal, I don't see them, slapping tariffs on it. So I don't know how much of that theory holds water. What I think is happening is that, I've been saying it on my X account, potentially something big is going to happen to the precious metals market in the next 6 months, a year, maybe year and a half, I don't know. But as me and you both know, Mario, when things like that, when you know historical events happen, when things that happen that changes the game fundamentally, the people who are in the inside would basically have early access to information, and they front run the situation. So my theory is that this incredible run on precious metals at the COMEX, I mean, like, at the LBMA, and the COMEX is sucking all this in to the votes for the last 6 months, 8 months, etc. My theory is that somebody in the know is front running whatever that is going to happen in the future. That's what I think is happening.
Yeah, and I remember, Eric, in the beginning of the year in January, that article came out in the FT saying that LBMA spot delivery was like delayed to up to 4 to 8 weeks. And I mean, I spoke to you and I spoke to Clive, and at the same time, Warren Buffett and Berkshire Hathaway, they've got like a third of a trillion in cash, more than half of their assets. And we speculated that whether it could be Warren Buffett or Berkshire Hathaway buying gold, or whether it could be the U.S. Treasury. And some people might ask, why would the U.S. Treasury buy gold if they've got 8,133 tons? Well, it's because if you've been listening to channels like mine and others in the precious metals, sound money space, we've told you for years that a lot of these central banks, they lease out the physical gold to the market in order to keep prices low. The problem is now with prices going higher and more problem with the U.S. debt, and we saw Eric, in the beginning of this month, even the Federal Reserve Board, some guy wrote an article about revaluation, which is something they rarely ever do. So I think it could either be some big investor like Berkshire Hathaway or even the Treasury. Why would the Treasury need to buy it? Well, they have to bring the gold back that they leased out. And that could be one of the reasons why. Yesterday, Secretary of the Treasury Bessent was asked about revaluation of gold, and he said, "Oh, I doubt that will happen." I mean, if it wasn't going to happen, he would have said, "Well, that will definitely not happen." So I want your take on that, and maybe you could uh, talk a little bit about these charts. I mean, they clearly show that this year COMEX warehouses have gone through the roof, right?
Yeah. So number one is what they say, Mario. They say that never believe anything until it is officially denied. Right? So maybe that's it. That's the cue right there, right? In terms of the charts, the wonderful charts that we have here from Nick Laird, okay, for the COMEX eligible and registered vows of gold and silver. As you can see, we had that spike in 2020, right, of gold and silver inventory, and then it kind of drained, and that drain coincided with the gold price correcting, silver price correcting, and going sideways for 2 years. And then last year, 2024, we started seeing that huge spike up. That's when the COMEX started really sucking in physical gold and silver. A lot of it, like I discussed with you and Clive, were from the LBMA. And like I said, the interesting thing is that the physical gold and silver at the eligible and registered vaults at the COMEX right now is still at high levels. So unlike last time, it's maintaining their inventories at high levels. Now, My friend on XPM Buck have made this observation with numbers to back it up. I don't have it in front of me right now, but essentially what PM Buck have found out is that over the last 6 months, even though you see on the chart, it looks like the gold and silver at the COMEX and the LBMA, maintained themselves at a fairly high level. Didn't really drain, right? But in fact, there were a lot of entities physically withdrawing physical gold and silver from the COMEX. So that's amazing, isn't it? What that means is that even though the COMEX gold and silver vaults are filled to the brim, for this whole duration in the last 6 months, there have been people, um, authorized participants, essentially, standing for physical delivery and withdrawing metals from the COMEX.
Yeah, the
So
reason why,
yeah,
sorry,
sorry,
I
go.
just interject there a little bit. The reason why it's amazing, some people might be asking, why is it amazing that people are withdrawing the physical gold and silver from COMEX? Well, it's because usually it doesn't move away from the vaults, right? It stays within the vaults and it's just transferred between JP Morgan and other actors in the COMEX exchange. But yeah, so please continue.
I was just gonna say it's extra amazing, Mario, because normally if there's a lot of withdrawal, the physical gold and silver levels at the COMEX would drain, basically, will go lower. But this time, as authorized participants are withdrawing a lot of physical gold and silver from the COMEX, as you can see on the chart, its vault levels are still at the highs. That means whatever that these parties are withdrawing from the COMEX gold and silver register and eligible vaults, whatever that is being taken out, the COMEX is filling it right back up to that high level. So that's what I mean by extra amazing, right? So what we see on this chart right here is not a full picture of what happened in the last 6 to 8 months in terms of physical gold and silver imports into the US.
So what's really also interesting, Eric, about this withdrawal of physical and the fact that it's not making a huge dent on the COMEX eligible and registered warehouses is that normally, let's say back in 2021, if the people who were doing the Silver Squeeze campaign, if they try to do that and they took a lot of silver out and withdrew from COMEX, the regulator would be right on top of them and they would stop them because, I don't know if you remember Rafi Faber and a few other people tried to withdraw just one 5,000 ounce bar from COMEX of silver, and they made it really hard. But here we have someone taking tons of gold, withdrawing. So to me, it shows that they're highly connected, i.e., maybe Warren Buffett and Berkshire Hathaway, or the top dog, which is the U.S. government.
I agree with you, Mario. It's like you said, it looks like nobody is stopping nothing, and the drain is just, really consistent on a monthly basis. So from that, like I said, I agree with you. I think it must be, either U.S. government proxies, like I said, 6 months ago when I was on your show with Clive, or just people who are close to the people who are actually making decisions on this, right? And they are front running whatever
Gold
that
and
is going to
silver have
happen
once again
in
captured the
the next 6 months,
spotlight
a year,
as
etc.
America teeters on the edge of unprecedented financial and political instability. With Donald Trump's recent surge in polling numbers despite multiple legal challenges, and the U.S. economy walking a tightrope of inflation, rate uncertainty, and record-breaking debt levels, It has become abundantly clear that the fiat system, rooted in endless money printing and blind trust, is broken. Gold and silver are not just alternative investments anymore. They are lifeboats in a storm of economic and institutional collapse. Every fiat currency in history has eventually failed. The US dollar, once backed by gold, now floats on the whims of policymakers and central bankers. The Federal Reserve claims to fight inflation, yet it created the very problem with years of near-zero interest rates and trillions in stimulus. And now, with CPI inflation numbers still sticky and consumer sentiment in freefall, they've cornered themselves into a lose-lose situation. Raise rates and tank the economy, or ease and ignite another inflation wave. Either way, fiat suffers, but physical gold and silver, finite, real, and time-tested, thrive. In the last few weeks, silver has quietly outperformed many other assets, pushing past key resistance levels while being largely ignored by the mainstream media. Gold, too, is testing all-time highs amid global central bank accumulation. Why are nations like China, Russia, and even Poland buying tons of gold while telling their citizens to hold cash? Because they know what's coming. They know the dollar is losing its dominance and that the next financial system won't be built on paper IOUs. It will be anchored to something real. Trump's return to the headlines isn't just about politics. It's about economic sentiment. His recent statements slamming the Federal Reserve and calling for a return to sound money are echoing louder than ever. Trump understands that Americans are losing faith in the institutions that manage their money. Confidence in the Fed is near all-time lows. The Treasury is issuing debt at a breakneck pace. Social Security is on track to go bankrupt. Meanwhile, the stock market continues to float on speculation, artificially supported by Fed jawboning and tech hype. But beneath the surface, cracks are forming. Young investors are waking up. They're beginning to see the trap. Save in dollars, and you're guaranteed to lose purchasing power. Trust in stocks and crypto, and you're subject to manipulation and regulatory whims. The only assets with a 5,000-year track record of preserving wealth through every war, recession, and regime change are gold and silver. And right now, silver is arguably the most undervalued strategic asset on Earth. Not only is it a monetary metal, but it's also essential in solar panels, electric vehicles, and industrial applications. The supply is shrinking while demand is surging. This is not a speculative narrative. It's a supply chain reality. Meanwhile, America is sleepwalking into another debt crisis. With over $34 trillion in national debt and interest payments now rivaling military spending, the writing is on the wall. The government has no plan to pay it off. The only tool they have left is inflation. Silent theft through currency debasement. If you're holding dollars, you're the victim. Every printed dollar makes your savings weaker. Every stimulus check, every bailout, every new government program funded by the printing press, it's a transfer of your wealth to the state. Look at the banks. Regional banking stress has returned, and big names are warning of a new wave of collapses. If even one major institution falls, a domino effect could ensue. And with FDIC reserves under pressure and trust in banks declining, people are beginning to ask serious questions. What happens to my savings if the system locks up? If you can't hold it, you don't own it, and that's why physical metals are making a comeback. Gold and silver require no counterparty. They cannot be hacked, frozen, or inflated away. They don't rely on government promises or Wall Street gymnastics. In times of war, regime change, or collapse, like the world is inching toward now, they are the final fallback. Just this week, Trump warned that America is closer than ever to losing the dollar as the world reserve currency. That's not alarmism, it's fact. The BRICS nations are actively developing a gold-backed trading currency, and the world is watching. The petrodollar era is ending, and with it, the dollar's dominance. Gold and silver will outlive fiat. They have outlived every empire that thought it could print its way to prosperity, and they will outlive this one too. While Wall Street distracts you with AI stocks and debt-fueled bubbles, the smart money is quietly accumulating hard assets. If the monetary system resets, and history shows it always does, those holding metals will have purchasing power while everyone else scrambles for crumbs.